Welcome to NASDAQ Trade Talks. I'm Jill Malandrino, Global Markets Reporter at NASDAQ. Joining us at the MarketSite studio, we have Tim Bonacci, President and CEO of Luma Financial Technologies. We're going to discuss introducing advisors to alternative investments and how that can potentially fit into client portfolios. Tim, it's great to see you. Welcome to Trade Talks.
Great to be here, Jill. Thank you.
And of course, it's been a volatile year in 2022 and probably will be for the foreseeable future as we decide, are we in a recession? Are we not in a recession? When is it going to happen if it does? And where do you believe investors can turn to best insulate their portfolios and prepare for what could be a little chop ahead?
Yeah, it's certainly, we seem to have entered a new period, if you will. If you think even year to date, the S&P is down about 20%, although it depends on what day you look, right? It's moving out quite a bit. Interest rates are rising, which means bonds are down, 10-year treasury values down about 15%. If you look at a 10-year trend, though, the S&P has been fairly steady. Well, there was a blip when the pandemic first hit, but then it returned right back to an upward trend. Same thing happened in rates for the most part as well. So we have many advisors and many investors who are really not familiar with the market different than what we've seen for the past 10 years. Mm-hmm. And I think what we traditionally, you'd always think about a 60-40 portfolio, although it's probably more historically you'd think of a 60, because even over that period you saw people starting to shift 70-30, 80-20 because there were no rates. So in this environment, though, I don't think we go back to a 60-40 portfolio. You hear a lot of people saying it, going to more 60-20-20, with the 20% being alternatives. And that was probably a little harder to do in the past. It's much more enabled now, but I think it's much beneficial for advisors. So I do think we're going to see a significant and continued, to your point, Jill's, shift into alternative investments.
Which is interesting because alternative investments, traditionally you would think of high net worth investors, and they were fairly illiquid. They weren't packaged into products that are easy for retail investors and advisors to understand. So when it comes to advisors introducing alternative investments to their clients, what's the best way to start that conversation?
Yeah, great question. There's 2 points. You're right. Alternative investments generally, one of the stigmas is that they can be a little complex. Mm-hmm. And in reality, they actually can. They can be a little complex. So where I think we go is 2 things to help with that. And one thing we say at Luma is kind of start with what you know, right? So if you think about the CFA Institute, they categorize alternative investments into 4 categories: hedge funds, private equity, real assets, real estate and other things, mm-hmm. and structured products. And one of the things I'd recommend that advisors and their clients look at it is starting with what you know. And when I think about a structured product, some of those other categories are linked to things people are not familiar with, private companies they don't know. Structured products tend to be linked to S&P 500, NASDAQ indices, FTSE indices, large individual stock names, Tesla, Meta, Facebook. That gives end investors and advisors a little more familiarity and help them transition into using more alternatives by starting with a product that they understand at least the basis of. The other part of structured products, though, they have crediting strategies around them to be able to customize to the client's need. So the next part that helps them is technology.
Right.
Years ago, it was just too hard for advisors to easily to have the products be as transparent as they should be as objective as they could be, and have the information that they need. So what I would suggest is advisors and their clients, as they look as moving into alternative investments, starting with some products they know, it'll make that transition much easier, and using technology like Luma or others just to help with the information that we can pass on to those folks.
Right. I remember in the late 90s, early 2000s, the books would be like this big when you're looking at one particular product for a high net worth individual, and now that it's available as simple and clean as we have it today is definitely a big help. And speaking of that technology, you've collaborated with Morningstar and the NASDAQ Fund Network to transform the structured product marketplace for advisors. Can you speak to the significance of those recent announcements?
Yeah, I think that's a very significant industry move we're trying to do in partnership. So we said technology is a key thing. All of our objectives for alternative investments is to get them included in investment portfolios. And that speaks to our partnership with Morningstar. Morningstar is well renowned as research and how advisors can look at analyzing things. And we've partnered with them in analytics that you can look at your portfolio, put a structured product in, how does it change your Sharpe ratio, your Sharpe ratio? Take it out, how does it do those same things that are helping advisors view this asset class in a true asset allocation methodology. Very excited about that. It's getting very good progress. Part and parcel with that is our actually partnership with NASDAQ, and specifically the NASDAQ Fund Network. We're working with NASDAQ to put a NASDAQ identifier, more simply said, a ticker, if you will, on every structured product. And what that means, it helps the end consumer get information on it. Structured products are a little hard to get information on for end consumers, but by doing this, making it more available on NASDAQ.com or all of NASDAQ's downstream firms that they give data to, Yahoo Finance, Google Finance, CNBC.com. You hear a lot of folks sometimes in alternative investment saying they're going to try to democratize products. The challenge I have when people say that sometimes is they're not doing anything different to democratize it. It's kind of like we're just going to sell more and that makes it more. We need to do things differently. I think the blend of technology, partnering with Morningstar, how they fit into a portfolio, and partnering with NASDAQ, that means an end advisor, if they have one in the portfolio, can go to NASDAQ.com and get all the basic information they want on their product. That is truly industry changing, and we're really excited about where that can go in our partnerships with those firms.
When you think about what's next, what does the future look like for Luma?
We're going to continue the same recipe we have. I mean, we've gotten two things really there as well. We've really gotten a very good market share in the United States, and over the last year or so, we've expanded globally into Latin America. We expanded into Europe. We recently expanded into Canada. We're just starting our expansion into Asia. So that global expansion, one of the benefits of our partnership with Morningstar and NASDAQ, they're both global in nature. The other thing is expanding into products. We've expanded in the U.S. into annuity products, which are very, very similar. Registered index-linked annuities, VAs, fixed index annuities have some of those same challenges. And we're leveraging some of our same partnerships to do the same things on those technology and analytics. And in other geographies, South America is more credit-linked notes and so forth. So following that same recipe on a global basis in that alternative space. So we're pretty excited about where the future's going.
All right, sounds great, Tim. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.